right. Hey there. Good morning, everybody. It's just after 11 a.m. Central Standard Time here on Friday, the 18th of November, 18th of October, 2024. Man, oh man. Hopefully, you guys are doing well. Coming at you live here from just north of Houston, Texas. Let me kind of see you guys already checking in here. Oh, I see you guys here. Peter, big love back, buddy. Allison, good morning, Peter. Yes, I see you there again. Good to see you. Man, great to see y'all checking in there. Soren, what's going on, buddy? That's my buddy from the other side of the water over there. Big trip away. But anyway, good to see you guys starting to check in and saying hi. We're going to talk about some good stuff today. You know, the main topic is Bitcoin finally ready to break out? Is the time really here? And we're going to talk about what I'm looking at and why, and kind of let you all know, where I sit with all this. Also, we're going to talk about some charts that we have. Netflix, TSM, both had earnings came out yesterday. Double beat on both. Absolutely crazy, especially with Netflix, man. What a move up. They released earnings after hours yesterday, and it just kind of kept on going up today so far. So a great start to the Friday. Bitcoin rallying this morning. What else is going on, man? The dollar pulling back. The DXY there pulling back. Gold going up. So nothing really out of anything I've been talking about. Everything kind of doing what I've been talking about for a while now. We'll take a look at the small caps. Again, they're rallying as well, or they've been rallying a little bit here as well. And we'll talk about why that's important for the markets. It's just, man, it's a good day to be a trader, guys. It's a good day to be a trader and be long today. Okay. It's a good day to be a trader and be long. So hopefully you're feeling that across the markets. The first thing I wanted to do here, let me see if I can find this screen share here real quick, is I want to let you all know this. By the way, hey, listen, first of all, go ahead and hit the like, hit the subscribe button, follow me wherever you see me, do all that fun stuff, leave a comment. We had a great group of people that followed us. We had about 1,000 people watching us at one point on Wednesday on Beards and Bitcoin. If you guys haven't watched that show, you should watch it. Tillman ruffled some feathers with some things he said about Bitcoin, but it was really like an extreme thought exercise about what could happen. It's everything he said is definitely something that could happen. We're not saying it's definitely going to happen. As he said, there would have to be these other things that happen, but it got some people interested, that's for sure. It's always really good stuff. And again, if you guys don't understand, the three of us, we have a big background, in TradFi, in the crypto industry, in markets in general. Tillman himself is probably the most learned of the three of us about Bitcoin. He actually ran a pretty big Bitcoin mining farm back around 2013, 14, somewhere around there. Thousands and thousands of miners he had. So, don't, because of what he says, and we say the word TradFi, don't assume that he doesn't know what he's talking about. He's definitely really well versed. But at the end of the day, guys, we're here to help you be realistic about Bitcoin. All right. And we all love it. The three of us, we're big fans. We're huge fans. We hold it. We're big advocates for Bitcoin. But at the end of the day, we do understand, TradFi and global finance and the likely way we'll see kind of Bitcoin going with that. But anyway, it's a great show. I think we try to give out as much, again, real information as we can, getting beyond just price. If you're looking at Bitcoin as something for the future, why should you maybe consider it, or what things should you consider if you're considering it, right? Hey there, Nathan. I see you checking in. Good to see you, buddy. Hey, listen, guys, if you haven't yet, I need you to go here and there we go. That right there. TexasWestCapital.com/97GC. This is what you're going to see. So it's the first time I've done this. So those of you that know, we do group coaching for about $4,000 a year. All right. And we just had a mentor program we did for the last couple of years. It was $10,000 a year. But one of my things that I've been trying to do is, how do I get it to the point where we can put it out there, what we teach? Because I honestly believe that what we teach is the best, absolute best way to learn markets and how to trade them profitably. Okay. But how do we do that at a price point that, most people that come along here can afford, right? And so this is what we're doing here. So the idea is, hey, listen, we're going to, if we can get enough people interested in this, we're going to go ahead and launch it from $4,000 a month to $97 a month, guys. Just a monthly. You can jump in there and do that. And if you're one of the first 500 people to get your name on the wait list here, it's $77 a month for as long as you continue to renew. So, I mean, absolutely unbeatable. I'm going to tell you, it's ridiculous how much you're really going to get there. And it's real information, guys. I'm not some kid that's been doing this for a year, you know, in crypto. 30 years I've been doing this. Pretty much every market that you can trade out there, okay? And so you're getting real world understanding of markets in general, not just what somebody thinks is happening because they learned something yesterday. And so I can tell you this much. If you join it and you really put your effort into it, it will change the way you look at the markets. It'll change your trajectory on how successful you can be. All right, guys? So anyway, I just want you guys to jump over there and do that. Check that out. All right. There's no commitment. You know, it's like, hey, listen, I'm interested. If you do this, I'm interested in, but this is no money that you have to pay in right here or anything. It's just to get you on that wait list to do that there. All right. Now here's the thing. We're waiting till we get a certain amount of people signed up to the list to make sure, you know, that we can launch this. Okay. But on the thank you page after you sign up there, there's going to be an offer for a lifetime access to our group coaching. And by the way, our group coaching includes our Traders Club, which itself is $50 a month. And so, you know, if you get the first 500, you're $27 more than that. And you get our entire group coaching, live sessions every week, hundreds of hours of recordings, courses. I mean, everything in there, guys. Okay. So yeah, but if you want to jump on the lifetime, and if you've paid for the C3 membership or group coaching over the last 365 days, get a hold of me and I can apply that to that lifetime price there and get you in for a lot less on that. So really just kind of put it out there. And you know what? If y'all are serious about trading, as you say you are, serious about what we do, you know, as we are here and whatever, then that's definitely what you want to get a hold of. All right. So, all right, let me jump over here. Now that I've said that and hopefully got you excited about it, let's talk about Bitcoin real quick here, guys. Check this out. So I just saw this and reposted this. Bitcoin flows here for the ETF funds. Huge, huge, huge flows, right? They're on pace to reach the highest level since the launch over here. So again, it was basically the, you know, the sell in May and go away kind of thing, and October coming in, right? So no surprise here in what's going on. I see some people that try to downplay it a bit. Oh, it's just hedge funds arbing and whatever because of what Raoul Pal said. And I like Raoul. I do. I like him. I'm a member of Real Vision. I'm a subscriber to Real Vision and whatnot. But at the end of the day, even he should know we are only 10 months into it. And it's a brand new thing in still a new technology. Yes, your greatest bit of money flowing in there is going to be your hedge funds at first, looking for arbitrage opportunities. But what we also know is if you watch the 13Fs that come out every quarter, we see a greater and greater adoption by pension funds, by other, by corporate entities, by other funds, right? We see, we hear about all the time, higher net worth individuals getting into this, okay? So yes, right now, a lot of what's going on with the ETFs is, you know, hedge funds, likely arbitraging, stuff like that. But that doesn't mean that's what it's going to be a year from now. And I think that's the more important thing. The fact is, at this point, $20 billion have flowed into these ETF funds right now. By far the most successful ETFs in the history of ETF launches. All right. It is significant. Don't just, you know, don't just play it some, you know, some side eye kind of in there. Okay. Dennis. Yeah. Just go ahead and put your email address on the waiting list right there. And that lets me know when you signed in and whatever, gives me the order of everybody came in. Like I said, the first 500 people get in at that $77 a month on that. But again, oh, by the way, on that second page with the lifetime, if you guys decide you want to do that, and you don't have to be a previous C3 member or group coaching member. I just mean if you have in the last year, I will apply what you paid to that. But if you jump on that, it'll start. If you did it today, if you jumped on that, got a hold of me and said, hey, Chris, man, I want to jump on that lifetime access today, I would get you set up today, and you don't even have to wait. You don't have to wait till we launch it. You automatically start today, no matter what happens in the future, and you've got that. So just letting you know that there. Nathan says, I'm in. Love it. Love it. Zobia, what's going on? Frank, Corey, good to see you guys checking in there. Mr. Jangles, I like the name. I like the name. I'm old enough. I grew up with the song Mr. Bojangles. So I love it. I love it. But yeah, so here's the first, that's the first thing, right? Is that we've got that. Now, the other thing I saw this morning, let me see here. Here we go. Yes. Look at that. Look at this, guys. Whales buying Bitcoin. Look at this. Absolutely insane, right? So you've got that along with the ETF flows, the inflows, what they are. I mean, you know, a lot of people are still going to be really frustrated with the sideways over the last 7-8 months. They're going to be very, very much questioning, thinking it has to go down. It has to go down to 40, blah, 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 that stuff. But the reality of it is, until we see some significant levels taken out lower down to actually suggest that we may go there, your bias absolutely should be to the upside. Now, what does that mean? Well, let me show you the chart here. Let me get off this and get on the chart. Where are we at? Where are we at? Where are we at? Is that what I'm looking for? Is that what I'm looking for? Yeah, buddy. All right. Let's pull that back up there. There we go. And let me see here. Why are we not? Oh, there it is. Ha! Got it. Surprise. Anyway. Let me pull this a little bit wider here so we get it to fill up the screen a bit more for y'all. Yeah, we'll do like that. All right. So anyway, so again, you guys, you've been following me, you've been watching, you know, this is what we've been talking about, right? There's nothing that's changed in what we're talking about here. And here we go. We broke out, we pulled back, we found support around this ascending wedge resistance. And here we are breaking up into, I'm going to zoom in a little bit for you here. This supply structure up here in the wick from Monday, the 29th of July. So we're doing that. So as I've been talking about this, you know, breaking up above the pivot here, I said, well, we should generally be looking for the R1 pivot on the daily as the target, right? So we've just about hit that this morning, guys. We've just about hit that this morning. The question is, what kind of counts do we have? Now, I've seen some crazy counts that suggest maybe like this is 5 waves up. I don't get it. I get it, you know, 3 waves here, 3 waves here. So it looks WXY, which goes along with the WXY here, right? 3 waves, right? So you got 3 waves up, pull back, 3 waves up, pull back. And we're looking for 3 waves up here. But here's the thing. This looks like 1, 2, 3, 4, 5, right? So it gets kind of interesting here. Does that mean we get a sudden push up here toward, you know, maybe 71,616 or, you know, just up near even the all-time high? That's a possibility. We can see people get excited all of a sudden, and we can see a thrust up there higher. But when we're looking at this, I think what we have to look at is maybe like a 1, 2, 3, 4 here and a 5. So that gives us an A, a B, and maybe a C to finish up here. Now I've got some targets that I'm watching here. So I've got the R1 pivot at $69,043 on this Bitcoin all-time high index. And then right above that, let me zoom in here a little bit. I've got 2 other targets. I've got a target based on the height of this recent pullback, right? So this pullback right here. And that target, as you can see, is right here at 69,493. And then I have a target based on this pullback right here, which, as you can see, is this one up here at the top of the supply structure at 69,874. So, you know, I'm looking at those 3 targets we go through. And if we continue going through that, then we'll look up here at 71,616. When I was looking at this whole thing here, it took me a minute to kind of figure out what may be going on, but it looks to me like we've got an A, a B, a C, a D, and an E here. So it looks like normally what we usually see are these symmetrical triangles like this, but we have something that's more rare. It's much more rare than that, and it's an inverse symmetrical triangle, and it looks like this. Or we call it the megaphone pattern because it looks like a megaphone. You know, those things you kind of put up to your mouth, and they're like small at this end and they're bigger at this end to make your voice really loud. Anyway, that's what this looks like here. Okay. And so the thought here, again, because you can see here on the 4 hour, we've got a move here and then this move here. So it gets really kind of interesting. I think on the 4 hour or the 1 hour even here, I think it's possible we can look maybe even like A, B, and then C heading up. And with that, we potentially have a 1, 2, 3, 4. And then we're working on 5 up here of C. So, you know, on the daily, it's a little bit more difficult to figure out what it might be. It looks like at 5, but I mean, you can get in here and go, okay, well, this may be, you know, 1, 2 or A, B here, and then 1, 2, 1, 2, 3, 4, 5 gives us 3, 4. And then we have what potentially becomes a 1, 2 working on 3, 4, 5. And so again, that could overextend this up higher here, or even the all-time high. I don't know, you know, if you're thinking about, the way I look at this is, if you're thinking about new all-time highs, you should already be long with some sort of position, that you're not trying to trade in and out of this movement. All right. Because again, as we start getting up here, we can suddenly see a thrust higher. Okay. And you don't want to get left out. And so this is one of those things about, you know, how do you approach trading? How do you approach markets? This is one of those things I spend a lot of time discussing every week with our students over at the Trading Academy, because it's so important, right? So you'll go often, you can go out there and somebody like, oh, here's my system to trade. You need to join this system. Okay. So you do, but the system does nothing to help you understand how you should be approaching the market, and when the market looks a specific way, and, you know, what things should you be considering, how you should be looking at it. And, you know, if you're not, and you don't really know what you're doing to begin with, then getting somebody's system really isn't going to help you at all. Does that make sense? The same way as getting somebody's system is not really going to help you if you don't understand proper risk management. So that's why, you know, with what we do, it's this all-inclusive thing, right? We take you from beginning to end. If you're experienced, we help fill in those holes that you may have along the way. I've got one student here who joined in with us, and they were saying that their risk management has absolutely just gone through the roof since joining. They'd been trading for a while. They had their own system, but the way that we discuss risk management, Tom, I said, it's absolutely amazing how much their risk management has just kind of skyrocketed. And so, you know, this is what we do. We're here to be serious about trading, guys. I'm not here just to kind of get you to pay some money. I'm here to, if you're serious, listen, guys, I don't want you joining in if you're really not serious about trading, because it's just a waste of money on your end. Okay. And I'm not into that. I'm not into you wasting your money. I don't need you to put your money in there to do that, to waste it. Okay. But Frank's in with us. He'll tell you what it's all about in there. Wazobia Dollars is in there with us. You know, Corey's in there with us. You know, they'll let you know what's up. You know, I can sit here and tell you all day that I think what we do far exceeds everything else everybody else does. But, you know, sometimes you just got to be told by somebody who's actually, you know, in there, not the person that owns the company, right? But that's why it's so important, because, you know, had you been in with all this, right, and with some sort of position, it doesn't have to be your entire position, but just something in case it breaks out, right? Had you been in there, then you're loving this. This kind of sucks to try and sometimes find the trade in here. Like right here. How many of y'all got freaked out here and thought it was going to pop down lower? Right? I mean, let's admit it. It's what most people were thinking at the time, right? But that isn't what happened. Found support right there at the R1 pivot, and boom, here it goes, keeps rallying up higher. But, you know, again, if you approach the market correctly, right, then you would already have some sort of position in there, depending on what you're, you know, again, when I say approach the market correctly, what I mean is, if you're expecting new all-time highs, you should have a position already set, some position already set from lower down that you're holding for that breakout, right? You can trade along the way with other positions, but you should have something in there, because with what we've seen here, right? With all this here, all this compression, all through this time, it could break out. Now, I always expect initially a move up toward the resistance first, and then a pullback, and then the breakout. But, it doesn't have to happen. You understand what I'm saying? I expect that because normally that's what happens. Okay? Normally that's what happens. But it doesn't have to happen. So you have to be able to understand, okay, well, what am I looking for it to do overall? And how should I be positioned at what point? Okay? So we broke the megaphone channel, dude. I don't know what you mean by that. Do you mean because it went higher and lower than the support and resistance lines there? Yeah, that's not a big deal. That doesn't make a difference. The megaphone pattern, or the inverse, what you call it here, triangle, all you need are higher highs and lower lows. So you get a high, you get a low. You get a higher high, you get a lower low. You get a higher high, you get a lower low. And within that, you're looking at three-wave movements, which is what we have, right? We can zoom in there, and we can see here, you've got 3 waves down, 3 waves up, 3 waves down, 3 waves up, and then you have this 3 waves down here. Okay? Draw the pattern going back 6 months. That pattern doesn't go back 6 months. What are you talking about? You talking about this over here, this thing? Yeah, I've driven it. Yeah, I've drawn it here. We're not above it yet, man. Right here to right here. You don't do this nonsense, guys. Listen, don't get lazy and do this nonsense. Don't do this where you're going off just the first two here. That's nonsense. Why? Because look at your support down here. All you're doing is you're going from support to resistance to nothing to resistance to support. No, you need to go between support and resistance, okay? So make sure you're doing it correctly. This is the correct way to do it. And you'll notice you find confluence in that resistance with the R1 pivot. The markets are all about confluence. All right, y'all? It's all about confluence. Yeah, you get me now? Okay, good. Yeah. Yeah, because you'll see a lot of this, right? And here's the thing, guys. If you don't know what you're doing first, if you're just learning and whatnot, you're going to see a lot of really bad TA out there. And that's why people say, on social media, that's why people say, oh, TA sucks. It's not real. Elliott wave is astrology for traders. All it's silly, stupid stuff people say, right? And it's because they haven't done it correctly. They haven't learned it correctly. All right. And so that's what I try to do here. I try to get you guys to learn how to do these things correctly. But when you're doing patterns, right, you always want the movement between support and resistance. You always want that movement through it. All right. Now what happens here? So we get down to the end of this pattern, right? And then it drops down below, and now we're back up. But the pattern basically ends right around here. But you can still look at that. You don't even need the pattern. You can look at the descending resistance. And what you just want to do is go from the swing highs. You don't want to cut through, because again, if we draw it here, like a lot of people are drawing it, you're getting all these breakouts, and this does nothing for you. Remember, your resistance lines and your support lines, they're meant to tell you if something significant that you need to pay attention to is happening. Okay. And so obviously, if you're drawing the line like this and it keeps getting rejected, pushes out through and comes down, that doesn't help you as a trader, right? Because if you're looking for the breakout, you may think you got a breakout. You may think you got a breakout. You may think you got a breakout, right? And if you've done that 3 times over the past, in this case, I guess probably about 4 months here, when it finally goes here, you might be reticent to jump into it, right? But always think of your resistance and your support as those levels that if you go through them, they should be telling you that price is doing that direction. Now, that said, when you have wedges and stuff, right? Like this is a wedge here. You can often get a throw over at the end of the wedge, okay? And you get a throw over the end of the wedge, which means just a breakout above the wedge resistance, and then it'll come back down into it, and then you'll rally back up. All right, so that's kind of the other side of it there as well, okay? Let me see here. Yeah, I think that's probably why everybody was saying 67.5. Wait, what is this right here? See, structurally, guys, listen, structurally, we have off the all-time high, we have a high, we have a low, and we keep going through that, right? We go high, low, high, lower high, lower low, lower high, lower low, lower high, lower low. So off the all-time high, structurally, we are still in this this bearish structure, okay? This is bearish structure. Now, we have to get above this swing high right here, which on this chart is $70,040.75. If we can break out above that, that breaks this bearish market structure. And then we have bullish market structure off the bottom here. Low, high, higher low, higher high, higher low, higher, well, higher high as it goes up, right? So from that, from a really generic standpoint, a way of looking at the market, we're still in bearish market structure here. But we're almost above it, right? We're like $1,500 away from it to do that. So, these are just some different ways that people are looking at it and explanations of why we look at it that way and what we need to do to really kind of do it. Okay. Let me see here. Let me see what else you guys got going on here. So yeah, 67.5. I think that's maybe this level, right? Yeah, they were probably saying that we needed to break out this because they're thinking that we're bullish off the low. And I think we're bullish off the low for other reasons, right? If we look at Wyckoff, this is a spring. This is a successful test of the spring, show of strength, the last point of support, running another show of strength here. This should be the low, as I've been talking about for a while. But if they're saying 67.5, they're probably thinking about this level right here. And just off this low, yeah, that gets you a good breakout. But market structure off the all-time high, the proper market structure, you need a breakout above the last lower high. And this is not a lower high because you have a lower high, a lower low. We're just in between it. We haven't made a new lower low yet. And if you haven't made a new lower low, watch. You could have said, listen, lower high, lower low, lower high. But then it didn't break down to a lower low to confirm this lower high. And what happened? We broke out higher. And then you said, okay, well, now lower high. But guess what? We still didn't break down below the lower low, and it's broken out higher. So now you're like, okay, lower high, you see? So you have to understand how to look at it properly so that way you're not, convincing yourself of something that isn't yet. But I think, again, if they were saying that 67.5 or 66.5 or whatever, it was likely just talking about getting above this. And really what you need is above this 70,000 or so level here, 70,100, depending which exchange you're looking at. Does that make sense? All right. How much does the overextended RSI factor into a pullback unless it's a mega candle? So remember, these are the things we talk about, right? These are why you need to really learn these things, right? Because most people online will tell you, oh my God, if it's overbought here or oversold here or something like that, that means that it has to reverse, right? And often it will, but many times it stays overbought for quite a while, right? This is the daily. This thing went overbought back here on October 20th and stayed overbought until November 13th for almost a month, right? All the overbought and oversold tells you, the overbought tells you you're really, really bullish. Oversold tells you you're really, really bearish, really strongly bearish. That's really all they tell you. Now, when they're up there, you're going to want to look for the reversal, but don't expect it just because they get in there, all of a sudden it has to get in. And so in terms of your question there, how much does an overextended RSI factor into a pullback? It doesn't. I'm trying to figure out what you actually mean by the question. Do you mean how far a pullback, or do you mean how soon it'll pull back? Let me know which one you mean there. because that'll help me actually answer your question better. Okay. Mr. Johnson, what's up, buddy? Good to see you there. Bernardo Reyes, you want Saul? Okay, I'll maybe pull up that chart here in a bit. Randall Dance, what's up, buddy? I'll see you there too. So yeah. So when we're looking at this, again, right now, if we're looking at the daily, you know, we're overbought here. We've been topped out and overbought for a few days on stochastic RSI. RSI is just now getting ready to push up into overbought. So realistically, again, let me point you over here. We went overbought around $46,000, $47,000. And other than this slight dip down here below, which was just kind of sideways here, right? We went from, again, we'll say 47,000 up until, God dog, 47,000 up until the high there, 73,000. So, you know, almost 30,000. So what was that? A 70-80% run while we pretty much stayed overbought. So yeah. Yeah. So, you know, you want to watch that. Okay. Dennis, I didn't find the link for the waiting list. I just bought the $97 subscription. It's that kind of busy right now. Wife is not at home. Oh, no, Dennis, it's this link right here. This texaswestcapital.com/97GC. So what I'll do, listen, man, just go ahead and get on that, sign up on that there. Okay. It's scrolling across the bottom of the thing here, texaswestcapital.com/97GC. Just get signed up on there, and I'll get you straightened out with the C3 subscription you just bought now, and we'll get you all figured out, okay, man? After this. What's up, Mr. Taylor? Good to see you. Let me see here. So yeah, so if we're looking at this again, don't just assume just because you get into overbought that it has to immediately drop down. Again, it can stay overbought for quite a while, and as you saw right here, just rally significantly, right? So that's why I say here, when we're looking at this, we're going, okay, well, we're approaching this market. How do we approach it? Well, again, you should be in a position from lower down here already if you're thinking about new all-time highs as some sort of position to make sure that in case this thing does not give you the pullback that you want or that you think it should. Because remember, the market never does what we think it should. It does whatever it's just going to do, right? We have no control over it. The only thing we have control over is how much we lose, right? Which is why risk management is so important. So yeah, again, for me, I've been talking for a while now. My first initial thought is that we're going to have some rejection somewhere in here and a pullback to this daily pivot area around 61,000. Maybe 62,000 here, right? And then we'll get the big push out. Just based on what we usually see with Wyckoff. But it doesn't have to do that, right? Let's take a look at this one over here. Remember this sideways here in 2023? This thing went sideways for 192 days. So from basically April until October. Sound familiar? And what did it do? And just big, huge move out right now. A little bit different structure here. We had a higher low coming off here. We didn't actually print a spring in this range versus what we have here, which is we printed a spring down here within this range. But we could still see this kind of doing that same thing. So again, I think you should be positioned already for that breakout in case it happens. But for me, I am looking for a possible pullback here first and then the move up. We'll see how it goes, okay? Let me see here. So yeah, so if we're looking at Bitcoin and we say, okay, well, are we going to do it or not? Let's jump out to the weekly. Now, the weekly is kind of compelling here, right? So what's going on at the weekly? Well, you can see the weekly, we have this 43, 44 area as support and resistance here, going way back, right? Going back to 18, continuing to go back, right? We bounced off that here. On this, we had the pullback here, and then on this pullback low, this test of the spring, bounced off it, right? broke out above the SMA and above neutral. And look what's happened here. Pull back, bouncing just prior to the SMA, rallying back up. Stochastic RSI doing the same thing there. Both of them are bullish above neutral. Both of them have room for price to continue going. So we could see it go. Again, I was looking, I didn't think that was going to happen. And we're still not sure it's going to happen, but you need to be prepared in case it does, right? So, so this is kind of where we're at here now. We're kind of like, okay, so we've got that descending resistance we're looking to run into here. It finds confluence with the daily R1 pivot with the supply structure here at this weekly July 29th swing high up there. Yeah, I mean, it's looking pretty good. Look at the monthly here. Look at the monthly here. By the way, don't you dare come in here and go from here down to here. Okay? Why? Because you have a higher high right here. Your bearish divergence was right here. It was these 2 points. And you got your correction off that. We are now at these points here. We've got higher highs. And we've got higher highs here. So when you're looking for divergences, don't skip other points along the way. Okay? Because I see a lot of people have been drawing this and putting this all over what's it called? Social media, and they've been like something like this here, right? Like, oh my God, look, bearish divergence. That's why it has to come down here to 12,000 or whatever, right? But this is not proper because this is not the swing high. This is the swing high. So between these two areas, there's your bearish divergence. Does that make sense? You can't be lazy when you do TA, guys. And some of you may not even recognize that you were being, lazy, right? What I mean by lazy is ignoring points that you have to ignore, not that you're like slovenly. But yeah, so when you're doing there, right, you need to pay attention to where you're at. Now, that doesn't mean this can't go down. But what I'm saying is if you're saying, oh, my God, this is bearish divergence, you are wrong. The bearish divergence was right here. And now we go from this swing high to that next swing high, which gives us higher highs. And we do have higher highs in price there, right? This was the all-time high now. So make sure that you're watching that. But as you can see here, look at how good this monthly looks, guys. Look at this. Look at this. And this one right here, opening on the R2 pivot and rallying up here, right? Dipped just below the SMA, breaking right back out above it, remains bullish above neutral. Stochastic RSI curled over, ready to cross bullishly, still remains bullish above neutral as well. It is the monthly though, guys, and we still have, another, 13 days left in this month. But, oh, geez, I'm sorry about that. Excuse me. But nonetheless, you should be paying attention to it. It's too early to call it. Again, there's still basically 2 weeks left in the month, but you should definitely be watching it. But do you see where a lot of this differs from what you see online with a lot of social media accounts? And these are important things to pay attention to. Okay? Let me see here. So this is Bitcoin. So are we ready to do it? I think there's the possibility it could. But for me, it has to show me that it's going to do it, right? I'll be ready for it if it does. But generally, the way we look at this is that we get this rally up. And this count here, if this count is correct, we shouldn't get some huge move out. We should get a rally up, into this area here, into this resistance where we have all this overlapping price action, right? We should get into this area somewhere and get rejected. And in that case, I'll look for that 60 to 62,000 area to then be looking for a reason to go long there. Okay? So that's what I'm looking at. Anybody that's guaranteeing you price is going to do one thing or another, stop listening to them. It does your emotions no good at all. Okay? It does them no good at all. You want to play this, intelligently. Let me see here. Doing a lot more training than I thought I'd do today. Hope you guys don't mind. Hope you don't mind. But again, I've seen some other counts on this, and I don't think they really make a lot of sense to me. So until this one disproves, like I've seen a count that said, okay, 1, 2, 1, 2. We would need that breakout that just continues running through the mid 70s and continues going for me to go, okay, that's probably right. But right now I'm really stuck on this, again, looks like a WXY here. So 3 waves up, 3 waves up. So I'm going to keep it with where we're at here, unless I get some reason to change it there. And of course, if you guys are in the group coaching or in the Traders Club, of course, you'll be updated on that as soon as I change my idea on that, if it happens. Okay. So that's where we stand with Bitcoin. Now, what else is going on? Let's talk about some things here real quick. Man, imagine being a bear over the last 2.5 years. It just doesn't make sense, right? So here's what we got going. Here's your NASDAQ. Here's your SPY, your S&P, and here's your Dow Jones, okay? Again, almost exclusively technology stocks here in your NASDAQ. Heavy tech, but also some others here in your S&P, broad-based, multiple sectors in the Dow Jones, okay? And what do we see here? We see that, of course, we're printing new all-time highs here. We did yesterday for the SPY. Here we go, trying to push up again. We hit an all-time high on the Dow Jones. Let me see here. 289. We're almost, yesterday, new all-time high at 289. 43,289.76. We're almost there. And so NASDAQ will print a new all-time high once it breaks out above 2690.97. Okay. And I'm going to tell you right now, I see no reason why it doesn't. As a matter of fact, if we're looking right here. Oh, what did I say? 2690. I think we'll get on this next push up. This looks like a 1, 2, 3, 4. So we're targeting this R1 pivot right here. Okay. R1 pivot right there. So again, everybody's giving you all the reasons in the world why the markets cannot continue going up, right? Y'all seeing that all over line, right? No. There's not just 7 stocks pushing SPY. See, that was for a while. It was the Mag 7, right? Earlier this year, though, they all started doing their big pullbacks. I mean, now we got NVIDIA still doing good and whatever, and got some stuff going on. This is a broad-based market rally coming. And again, this is something I do with the Traders Club, which you get access to if you're in the group coaching. Or if you're just in the market, in the Traders Club, you get this as well. But I do like a 20, 25, 30-minute market update every weeknight for our members, where I discuss what's going on with the markets, futures markets, stocks, and crypto in there. And so, as a matter of fact, I'll show you something here, Nathan, in just a minute, okay? I'll show you something called the RSP, and that'll give you something interesting to look at. But nonetheless, we continue to push up higher, everything going up. And the way you should look at this is, if you want to know, okay, how is the market doing? Look and see, is the Dow rallying? Because if the Dow is rallying, right? If the Dow is rallying, remember, this is our broad-based index. This gives us stocks from all the different sectors, basically, right? Rather than just very heavily skewed technology, or still heavy technology here, just lesser than what you have in the NASDAQ, SPY. When you see the Dow rallying, what that's telling you is that the market itself overall is rallying. Okay. Scott says, how often do the R1 pivots hold in reverse? That's not it's not as simple as that. It's not, oh, we're going to hit that and do it. The pivots give you general areas of support and resistance based on previous price action. Okay. But they don't have to hold. We're looking for specific things to happen about them, right? So like I have a pivots points master course that I sell, right? And it goes into what the pivots are, the different types of pivots there are, how to use them, Are you a swing trader? Are you a day trader? How to use them with Elliott Wave, with Wyckoff, with moving averages and stuff. And that really kind of gets into the intricacies of it. But just because the R1 pivot's there doesn't mean it has to. In what I usually look for, though, I'll give you guys this. Okay? What we often look for is if we're getting this bounce off the pivot, we often look for a rally into the R1 pivot. And if it gets rejected there, we look for a pullback to the pivot once more. That's generally the model that we look for, and then we look for the breakout higher. But if we get an impulsive rally and breakout and close above that R1 pivot, that could suggest that we're going to rally up through the R3, R4, or even R5. Now, there's a little bit more intricate to that, but just basically speaking, that's kind of how we look at it when we're looking at pivots. So they give you like those initial areas of support or resistance, but you have to learn more about, the models that we use when we're looking at it as far as what may be coming out of it when we do it. So, but hopefully that makes a little bit better, right? Bernardo says, I am more of a successful algorithmic trader. What do you mean successful algorithmic trader? Aren't the algorithms doing it for you? Yeah, no. He says, are there any value for joining the group and learning more about Elliott Wave? I think everybody should learn Elliott Wave. And I do because, so those of you that don't know, I collect pieces of paper. I've got multiple master's degrees. I've got a law degree, but one of my master's degree is applied psychology with a focus on applied economic psychology. Okay. And so I combine that with my 30 years of doing this. Right. And what Elliott Wave does is it lets you into the way that human beings act and react. It gives you real insight into how human beings actually act and react. And so when you learn Elliott Wave, you start learning how and why the market moves the way it does. That's the big part about what we do in our group coaching, right? We teach you the tools. We teach you Elliott Wave. We teach you Wyckoff. We teach you price action. We teach you price action plus volume analysis. But we teach you those tools so that you understand how and why price really does move the way it does. Because there is a rhyme and reason to it. It's not erratic. It's not whatever the word is. I can't think what the word is at the moment. You have to excuse me. But there's a rhyme and reason of the way price moves the way it does. And Elliott Wave can actually help you project your targets, your target areas, right? It's where we kind of know where the tops and the bottoms are. It's how we know. For instance, Elliott Wave, let me show you something here real quick on this. So I've gotten a lot of heck about what we're looking at here, right? But look. So this is my count here, right? And so coming off this bear market swing low here, here's one, here's two. Now wave 3 has an initial expected target of the 1.618 area. It's 76.5. We got right up here to, oh my gosh, whatever this was over here, 74,000. So we got right there. So wave 3 target met, right? What happens when you do wave 3? Wave 4 initial target is a 38.2 retracement of wave 3. Okay. 38.2 right here at 48,644. We pulled back to 49,000. We got right there. So yeah, does Elliott Wave work? Damn right it does. It works extremely well. But these are guidelines. They're not rules, right? So this is why I said, even if the 38.2 didn't hold and we broke down below it, I wouldn't all of a sudden expect, oh my gosh, that's the end of it. This is the top, because wave 4 has a secondary target of the 50% retracement. So that's what I would be looking for, right? And I would be trading accordingly. So, is there any use in learning it? I think there's a lot of use. But here's the great thing. Even more than Elliott Wave, you're also going to learn Wyckoff, which is how and why, traders, retail traders, and professional traders, the composite operator, right, work within ranges. And again, that delves into the price action and volume analysis, because the big players, right? You can't, the way they tell, you can tell what they're doing by understanding how the volume and price action is playing out together within a range area, right? And again, that gives you an understanding into how and why those prices move. So when I go and I say, well, you know what, listen, guys, to me, according to Wyckoff, based on this particular volume and the price action areas in here that I look at, and with this down, this suggests this is reaccumulation. This price action and volume here in relation to what we saw here suggests this is a spring. This pullback on this lesser volume here, printing a higher low, tells us it's a successful test of this spring. And we should head up higher, right? So, I mean, these things tell us what to expect and how to do it. So if you've been following me for the last 6-7 months and you wonder why the hell is this guy not freaking out, and why does he keep talking about in the macro why this is, he believes this is just sideways and higher, this is why. Okay? But there's a rhyme and reason for why price moves the way it does. And you learn it because at the end of the day, these human beings in the market, right? At the end of the day, algorithms and whatnot are coded by human beings, which, believe it or not, are affected by emotions. And that finds its way into the coding as well. But we know that people tend to act a certain way around a certain area. So when you get your algorithms and your stuff coded in there, often there's some of that in there, whether the developer, the programmer really understands that they're doing it or not. And we know this works because it's worked for 100 plus years and it continues to work today, right? My big thing is people say, well, Chris, like you tell us, 70%, 80% of volume in the stock market is algorithms. And it is. Well, then how can this possibly work? And yet I show them day in and day out that it still does work, right? Because at the end of the day, everything is because of human beings, right? And human beings, we tend to sit on this kind of flat level, right? If we win some money on a scratch off or the lotto or something, right? Or we're in Vegas, hit it big, win 20 grand, woohoo! Our baseline is here, and let's see, I get over here. Our baseline is here, and we go way up here, right? But we don't stay up there. Eventually, we come back to that baseline, or maybe a new baseline, right? Or if somebody passes away and we're really sad, we lose our job. Hated that place anyway. Screw them. They're losers for not having me there, right? But we're going to be upset at first. And so we'll drop from our baseline down, but we'll rally, we'll come back up to the baseline, right? Healthy human beings, mentally healthy human beings, this is what happens, right? The market is no different. The market is the same way. You're going through emotions of fear and greed, but you always return to your baseline or your adjusted baseline, right? And so when you learn that, you go, holy crap, all of a sudden the market starts looking completely different to you. All of a sudden things start making sense. Like that wick with that volume there starts making sense on there. All right. Man, always appreciate you, bud. Thank you. Let me see. What's a typical amount of seat time the average trader needs in your course to become proficient, at least sufficient enough to make some money? Money being the end goal. I understand that. Money's not the end goal for itself, right? Money is never the end goal. We don't make money just to make money, right? We make money because what that money does for us, right? Pays bills, provides freedom of time, provides freedom of movement, right? So our end goal is actually not money. It's what does that money do for us? Now, what's the typical amount of seat time? It's really going to depend on you. I've had people really catch on within like 3 or 4 months and just be like, bam. Other people, it's taken a year or longer. It really depends on how serious you really are. Because a lot of times we say we're serious about things. I've done it in the past myself, and I'll get something and I'll be like, it just kind of sits there, right? So it really kind of depends on just how serious you are, and then how disciplined, focused, and dedicated you are to putting the time and effort into it, right? But you can, and then, it really, again, it just depends on the person, right? Trading's this crazy thing that people, it's like, you'll sit there and you'll read a concept and you'll do it over and over again. You'll be like, it just doesn't make any sense to me. It just doesn't make, and one day you'll wake up and just like that, all of a sudden it's clear as day. And you're like, why the hell did I have so much trouble figuring this out the last month? That's the way I was when I first started learning Wyckoff and price action and volume analysis within Wyckoff. I was like, but how do I but you're saying there's more selling volume coming in that doesn't make any sense. How do I know that's selling volume coming in? Right. And I struggled with that for a bit myself. And then one day I woke up and it was just like, boom, there it was. And I was like, holy crap. Okay. I get it now. I get it now. So yeah, I don't want to lie to you and tell you, oh, you're going to have it in a month. Likely you won't. There's especially with our focus being on what we do at TWC, being on understanding overall markets and how and why they move the way they do. Because once you understand that, you can create your own strategies effortlessly. You can look at somebody else's strategy and go, that's not going to work consistently because of this, or that. Or even you can look at somebody else's strategy or their algorithm where it's playing out. And you go, no, that doesn't make any sense to buy there or to sell there because what I know about markets and how they move, that doesn't seem likely at all. Right. So I wish I could tell you it'd be like 3 months or something or whatever it is, but it really just does depend on you at the end of the day. It really does. Right. You're looking end goal being quitting your job. I do not like it. Not interested in my field. At least I'm interested in charts and markets. We've had people that come in and they've decided they want to jump on it and they're able to quit their jobs, right? Hey, what's up, Vince? The V-Fib right there is there. He's one of our head traders over at the Traders Club. He joined our group coaching when it was much more expensive. But he's one of the ones that decided, listen, he was really serious about it. He wanted to get into it. He was leaving his career and he wanted to do this and he got in there and within a year was just knocking it out of the park. He figured it out. He got it. He had the interest, he put in the time and effort he needed and he did it. And and he did so well. That's why I invited him on and why I brought him on as a head trader with us. The same thing with Andrew Bennett. You'll see him show up sometimes in here as well. He did it within that first year as well. And so, it's absolutely crazy how effective it can be once you learn to do it properly. But that, unfortunately, it's not just simply, oh, I bought the training or the course or the group coach or whatever. It's, did I apply myself properly in it? Like anything else in life, right? You can get somebody to coach you at anything. And if you're not really putting in that effort, you're only going to get minimal results, right? So, yeah, there he goes. He said, yep, it was well worth the money for the course. There we go. And I do. Yeah. Yeah, I am very realistic, guys. I'm not one here to blow smoke up your rear end. At the end of the day, again, I don't want you blowing your money, whether it's with me or anybody else. In a lot, I'm going to be honest with you guys. The same way I preach here, the way that you treat trading is going to be reflected, or the way you treat life is going to be reflected in the way you treat trading and learning it and whatever. So that you cannot be different in your real life and the rest of your life as you are in your trading. Your brain cannot handle that. It will not disassociate for you. So if you have limiting beliefs in the rest of your life, you're going to see them show up in your trading. But most people don't realize they have that. So again, this is a lot of the stuff I talk about as well. And as we launch this group coaching, I'm going to be adding a hell of a lot more trading psychology and market psychology for our students as well, because that's the part, any monkey can learn to trade, right? You can teach them to do things, but it's that psychological and emotional side of it that makes the greatest bit of difference. That's the one that's going to determine whether you're successful overall or not. And so, I focus a lot on it anyway, but I'm going to get more structured content in there for you guys. What's that picture next to me? That one over there? That is Tom Petty and the Heartbreakers. It's a signed lithograph from their poster for their July 10th, 1980 tour that they had there. That was from the Pittsburgh part of the tour. So yeah. Love me some Tom Petty, man. Sad he's gone. If I get inside the course, do you guarantee I will become a millionaire in a week? I don't guarantee you a damn thing. Because I can't force you to do the things you have to do to get to that success, right? But what I will say is, if you're legitimately, serious about learning to trade, and you do put in the proper effort, the proper discipline, focus, time, consistency in learning it, just as you would have to with any other skill you wanted to learn, it's going to change the way in which you look at the market for the better, much, much for the better. So yeah. Let me see here. Hey, for a lifetime sub on 97 gives me an error because it says I'm already subbed to TWC. My man, send me a message. Send me a message there on TWC, the DM. I'll get you sorted. All right. But anyway, so yeah, let's jump back over to the charts, guys. So again, when we're looking at markets, there we go. So, again, I've been talking about the last 2.5 years that we're going to continue going up. Remember, I told you guys, well, I don't know how many of y'all were around, but I said that we were looking at probably 50,000 on Dow at least before we got like a real, what do you call it? Recession or something. And so right now, and that was when we were down around 26,000 or so. And of course, I got a lot of laughter and whatnot at that point. But here we are at 43, almost 43 and a half. Eat it. Deal with it. Just kidding. I like to have fun. But seriously, so, again, I continue to look for higher overall with the NASDAQ, the SPY, the Dow. I wanted to show, so I wanted to show you RSP. Here we go. So those of you that don't know, RSP is the equal weighted S&P. Okay, what does that mean? It means it doesn't just have the large caps, which the S&P does. It also has some small caps in there. Gives it that equal weighting. Right here was a breakout into a new all-time high. So why is this important? It's important because you have your three major indexes, right? Two of them, the S&P and the Dow, both at new all-time highs. You have the NASDAQ almost there. It looks like it's probably going to get there. Then you have the RSP, new all-time high, right? So what you're showing now is you're showing that you have growth across all of the market. It's not just the Mag 7 pushing, right? It's not just the Mag 7 anymore like it was a year ago, okay? It's all these different sectors that are going on. What's the other sector? Well, some of you all may remember me talking about RTY. RTY is the futures for the Russell 2000, IWT, okay? So this is the futures market that you can trade with it. Now, those of you that were around, maybe you remember back in October of 23, I talked about we'd likely get a spring below this range. And if we confirm that, which we did here, then that would set us on our next leg up, right? And so here we go. We rallied up over 9 months. I think it was 9 months. We rallied up about 41%. That's huge in 9 months here. When we got up here, a lot of people were like, oh my God, what if it's just doing this here? I think it's just doing this here. They thought, okay, it was just going to get rejected, head on down lower. I said, anything's possible, but at the end of the day, what are we doing here? We're keeping with our count, what we have. What have we done? We've rallied back up. We're right about ready to break out there. And why is this important? Because right now we're sitting at 22.93. All-time high sits just a bit higher there at 24.26. So basically 125, 130 pips higher, points higher. And you hit a new all-time high. Why is that important? Because we go back to the major indexes are all hitting new all-time highs. And then again, NASDAQ is almost there. RSP, new all-time high, equal weighted S&P. And you got your small caps coming in as well. So now you got an economy where you have your large caps and your small caps rallying at the same time. This is once we're getting these breakouts here with like the NASDAQ and IWT or RTY here, the small caps, this will be like the healthiest market we've had in I don't even know how long, because everything's going up, right? Very, very important. So again, it hasn't done it yet, and it could always not do it, but again, I'm going to continue to look toward that because that's what the count says. A lot of room on the weekly for it to continue to head up there as well. So we continue to look good there, right? DXY, what's going on? We finally getting our rejection, right? We're finally getting our rejection here. And so I may have to come back in here and check this count out. Let me do this here. But what I'm looking for is a impulsive breakdown and close on the daily below this support where it's coming up against. And that's going to hint that that top may be in. And what we really need is a breakdown through this right now, the daily pivot down here about 100, almost about 101, to really kind of confirm we're heading lower. But nothing's changed yet. I believe we're still headed down lower, minimally 93.97 or 91.12. Potentially down here around even 79. So right now, though, looking for this rejection and follow back down through the pivot. By the way, there was that question earlier about should I learn Elliott wave? Well, let me show you what happens here. Again, I don't know how many of y'all were following me back here on the YouTube channel back here in at the end of 2020. Oh, I'm sorry, not 2020. Back over here. Let me see, where was it? Nope. It was right here in 2020, okay? And what I did was I said here, as we got here into January of 21, I said, listen, I said, usually the Forex, right, your major pairs will reverse in the first month of the year. And at this time, I believe we were looking at, it was extremely offsides. It was something like 94 or 96% short and just like 3 or 4% long. So the other thing I said at that time was, listen, the market tends to punish those when they're severely offsides. So I said, this looks like it's likely the bottom here. And I gave a target of 114 to 115. I did it on my YouTube channel here. And then I reiterated on different shows I've been on throughout the years coming up. We rallied up here to 114.745. So from January of 21 to September of 22. And once there, I said we got initial target of the 100. And of course, we've hit that. All based on Elliott wave. Troy, what's up? I knew there's going to be somebody here from back then. He says, I remember you saying that about the DXY, Chris. Yeah. So I'm telling you, if you're wondering, should you learn Elliott wave? I think you should. It helps give you great targets. It helps you understand markets better because you understand, that there is a certain method to the madness of why price is moving the way it does. Okay. Does the price of gold worry me about the current state of the stock market? Nah. No. A lot of people talk about, oh, if gold's going up, then everything else to be going down. But if you take some time, again, this is where we have to get off the things that are commonly said and look for ourselves. If you go compare gold to stocks and everything else, you'll notice a lot of times they actually run together. Why did gold break out? Let's talk about gold here. Here's gold. Oh, almost hitting our initial target up here, 2762.90. Secondary target at 2792. By the way, using what I know about pivots and what I know about Elliott wave, right? The breakdown through this initial support told me we'd probably get a target here, which I think is what I told you guys here. And then we'd look for a reversal, head back up, right? So there we go. We're doing it there. But watch, let me show you something here. Let me see if I can do this. Oh, look at that. Look at this. Such a beautiful, on the weekly here, look at a beautiful hammer candle, or not even a hammer, a doji. And then this big, large, bullish engulfing candle coming out this week. But let me show you something here real quick. All right. Let me clear this off. And we'll put in what? We'll put in the Dow Jones. Okay. All right. Look at this. Why would we be worried about gold going up? Gold and stocks have been rallying since September of 22. They had the pullback over here. The COVID drop there in 2020, right? Guess what? They were still going long from here in December of 15. We can look at 15 and go, man, it's continued to go up lockstep almost the entire way. Look at the drop. We had the top of the Dow here in October of 07 to do the what you call it, the recession, right? The great financial crisis. And then just a few months later, March of 08, gold topped out and dropped down, right? There before heading up. But you can look from right here, March of 2009, they've both been headed up. Now, gold took a big kind of break here. Right up. Don't anybody tell Schiff. I think he forgot about that. But nonetheless, basically, we've gone up and it's gone up, right? We can look at from 2015. It's continued to go up with it, right? So really no reason to be concerned. Oh my God, gold's going up. So that means the stock market has to crash, right? But yeah. Anyway, the best way I could probably talk about that there. I don't know that I really say anything else more to it, other than just kind of showing you visually, right? Why is gold breaking out? Because guess what, guys? Hit all that. We had a top here in August of 20. We hit it again in March of 22. Hit it again here in May of 23. And then we finally broke out. You know, we were just range bound here. Guess what? Elliott Wave and Wyckoff explained this range to us, that this was reaccumulation. We knew it was going to break out higher. Talked about a lot on here, right? So if you ask, are these things I teach worth it? Yeah, clearly, right? Let me see here. Let me jump on. Didn't have another chart. Oh, real quick here, I want to talk about it. I talked to our TWC Traders group there, Traders Club, right? Before Netflix, earlier this week, before Netflix and TSM came out, I told them to watch both of those on Thursday, and those would probably, looking good on them. And if they're good, then they're going to keep the market buoyed up, right? And so what happened? TSM came out with earnings before the market opened, right here on Thursday, right? So it popped up. And by the way, new all-time high here, right? But it popped up from a low there to a high on Thursday, 13.3%. It opened about 8.4% above the previous day's close, right? But here we are, new all-time high, big volume coming in on that. Probably get a pullback to fill it in, maybe even a little bit into this here, and then look for it to go up. If we drop into this gap here, right? Guess what happened with Netflix? By the way, there was a double beat on TSM. Double beat on Netflix after hours Thursday. After hours Thursday. So today, they've rallied almost 11% from that Thursday close, from yesterday's close. It opened 7.2% higher. So, man, absolutely fantastic. This is volume coming here. Crazy volume. It's capitulation volume here at the low, and then huge volume driving that gap up there. But those two doing so well. By the way, banks have been doing well, right? Here's the thing. Earnings season just started Friday. It kicks off with the banks as usual, right? Wells Fargo, great move up. I think they beat on earnings. They were a little bit behind on revenue. Markets still like the market rallied with it. JP Morgan came out, did extremely well. Tuesday we had, was it Morgan Stanley that came out? Did extremely well. So the big banks are all kicking it in. And it's like, okay, so on top of the market, the sectors of the market all kind of doing really well. The banks are doing well. Even the regional banks are doing well. Remember everybody trying to fearmonger you into the whole, they're illiquid and they're all going to die off and whatever. They're doing pretty decent right now. Watch KRE. Okay. That's the regional banks ETF. But again, you want to get off of this. Oh, this thing's going to happen. That's going to happen because of this or that. Inverted yield curve. They've been talking about that for 2 years now, 2.5 years now. And it's the longest inverted yield curve in history, right? It keeps uninverting and inverting right back. Now, this doesn't mean things have to go up forever, but what it means is until something significant happens, and not this other stuff, because guess what, guys? The economy after the COVID in 2020, after COVID, the economy and employment are different. They are not the same. Everybody's freaking out when the Psalm rule tripped. Remember when unemployment went from 4.1 to 4.3%? And I told you immediately, I said, listen, things are different now. The Psalm rule worked prior to the pandemic because of the way in which the economy and unemployment, the employment thing was all set up, right? The way it was. But things are significantly different after COVID now, which means likely not an issue. And then she came out like 4 or 5 days later publicly and said the same thing. She was like, listen, I know it tripped, but I'm looking at this. We aren't in a recession. We could get to one, but we are not in one. Everything, basically she just said what I said, which is everything is different now as far as employment landscape goes and the economy goes than it was prior to 2020. What do you call it? COVID, right? And then, I forgot what I was going to say off that. But anyway, I guess what I'm trying to say is, no. And then my other point was the fact that historically, 4 to 5% is considered full employment in the U.S. because there's always going to be a small percentage of people that aren't going to be employed. So the government says 4 to 5% is essentially fully employed. And we've spent a record number of time below 4%. So this idea that we went from 4.1 to 4.3, oh my God, that means it's the end of the world. No, we're still historically fully employed. And then what happens now? Then we drop to 4.2. Then we drop to 4.1. And you can argue the validity of the numbers. You can argue all the stuff that you want all the time, whatever you want to do. But what I see people arguing about, the numbers are going to get, revised downward because that's what they keep doing. Oh, it's all, they're just screwing with the numbers. And then the numbers got raised upward, right? And then they're like, oh, well, they're just screwing with the number. It's like you can't win for losing with people, right? Do I teach all of this, what you've been talking about today in the group coaching offer? Is there other course I would have today? Oh no, Scott, this is just the scratching the surface, my man. I try to give everything that I know, everything that I've learned over the last 30 years, whether it's market and trader psychology, whether it's how and why markets move the way they do, whether it's how do you correctly identify patterns, how do you properly do risk management. It's all about, how do you deal with emotion? It's everything. Yeah. I go deep into all this stuff constantly. Talk about it constantly. Yeah. And usually if there isn't something there that has to do with what we're learning, whatever, and somebody asks me about it, I'll put together something and I'll post it for them. Like a flash course, a video, usually. Yeah. Matter of fact, I just saw a DM from somebody that was asking me about if I teach something. It was something about limit orders or something on Coinbase or something. I'm going to throw that together for them this weekend and post it out for everybody as well. But the goal is, whether you're brand new to trading or you're experienced, the goal is to give you something that is going to change your trading for the better and help you become a better trader. Do I know everything there is to know about trading? Not at all. And that's what keeps me going. I will never believe I know everything I need to know. Because the minute you do, you start falling behind, right? What's my thought on the whole, if Trump gets into office, he'll trigger a recession with his tariffs? I think that's all overblown. But again, we're talking about trying to, this is the hard thing about fundamentals. We have to get it right. And then we have to give And then we have to get the idea of if it does or doesn't happen, what are those results? And we have to get that right. And then we have to get it right about, is it going to happen one way or the other, right? And that's the big thing about fundamentals. That's what makes them really tough and why most people get them wrong constantly, which is why I focus on charts. As far as Trump, I think the tariff thing, I think they're just looking at it to, I mean, I'm not a big fan of tariffs to begin with, but, you know, as a general thing, but we've allowed China and others to keep tariffs on us for agreements we signed when we were helping them build back up and getting them money and all this crap that should have been stopped a long time ago. And so they've really kind of continued to push these tariffs on us. And I think him coming in there with the tariffs, I think it's the greater effect. It's going to be to get them to bring down their tariffs. It isn't necessarily that he wants to create tariffs for the sake of tariffs here in the U.S., but it's to get them to lower their tariffs that we've let them get away with for so long, right? Which makes things produced locally, you know, here in the U.S. much more expensive, right? The other side of it is it makes those companies who don't want to pay the tariffs, it makes them invest here in the U.S. and open factories and whatnot here in the U.S. As well. At the end of the day, we're a services-based economy. We're not a manufacturing-based economy, which is why everybody freaks out when manufacturing PMI comes down. They're like, oh my God, it's down to 46. Below 50 is contraction. Above 50 is expansion of that area, right? But our services have continued to rise. It's 51, 52, 53% now. And that's the more important one because our economy is much more service-based than manufacturing-based. So I don't think I don't think it's going to have this crazy effect that everybody thinks it has. If we get a recession, it's not going to be because of that. It's going to be because the markets are done with what they're doing, right? It's going to be because people are done with feeling safe in the market. They're going to pull their money out of the market. Market's going to go down. It's going to put pressure on companies. Companies going to, not going to be able to pay as much. They're going to have to fire some people. They're going to have to, contract a bit. It's to slow down production. All it's a product of it, right? Everything we look at, the tariffs, the unemployment, all these things are all lagging indicators. They all tell us what has already happened when we get those results from them. So I'm much more, attuned to watching the charts themselves, seeing what goes on there. Oh man, look at that. Bamboo, thank you, sir. Look at that. Bamboo's been with us for a while. He's one of those ones that continues to hang around. He likes what we do here. And he's a great guy as well, of course. But yeah, I don't give a whole lot of thought to, oh my God, tariffs are going to do this or that. If they were to do that, we will see it show up in the charts. If let's say if tariffs were to lead to a recession, we would see it in the charts because the companies and the people would stop putting money into the markets. And once you start putting the mood, that the social mood is different then, right? So that's that. What did you guys say you want to see Sol? I'll pull up my Sol chart here. I did a lot more educating here than what I usually do. So hopefully you guys were okay with that. Hit the thumbs up, guys. Hit the like. Follow the channel. I'd really appreciate that. Leave a comment if you can. That seems to work really well with the algorithms to get it so more people can see it. I get often put out of place by a lot of the larger accounts. They seem to take up all the air in the room, and I'm out over here saying, "Look at me, look at me." But if y'all wouldn't mind doing it, I appreciate it. And follow me there on wherever you're watching from, whether it's Twitch or Twitter or X, or YouTube or wherever it is. Again, this has been a great day. Does Elliott Wave work? Yes. On the Wendy O show here, you guys can go look in Wendy O. Look at on the 12/30/2022 on that show. I said it was I said it was a good buy there, and I said we should at least be looking around $15, and if we get that, $30, and that was just the start. And so as you can see, that was the low. I mean, this is the weekly, but that was basically the low. And we rallied up to what, 200 and some change here. Again, right here is what I believe same thing we're seeing with Bitcoin. And we're just getting ready to break out higher, right? So we've pulled back to support here. You can see that we have, by the way, you'll learn, one of the other things you'll learn in our group coaching, I have these things that I call demand and supply structures, the green and the blue ranges here. You'll learn about them in there as well. But this right here is the weekly demand structure here. And you can see that as usual, we basically hit the, you can see right here, the EQ of it, which is usually where we target. We've got a bit of a descending kind of wedge thing going on here. Again, like Bitcoin, this really screams reaccumulation here with a spring here taking us below, you know, this low right here, a low there, and heading up. So for me, still looking for higher based on the height of this pullback. Based on the height of the pullback, yeah, that would get us at least 315. I've got another target up here at 410 that I'm looking at. But just absolutely beautiful move here on the weekly. This nice pin bar candle on support here. And then boom, takes off. I mean, it's just been absolutely just fantastic the way this has worked. So yeah, I'm still looking for it to head up higher there on that. No reason to change anything on that at all. Let me see here. Let me see what he's got here. Frank, what's up, man? What'd you say? There are many people out there offering trading. There are very few with more integrity. Oh, man. Hey, I appreciate you, man. Thank you so much. Really, I do appreciate it. Oh, that's right. Gareth was on that show, wasn't he? That's right. Bambi says, I remember that show. You called Saul, and the other guy, Gareth Soloway, was not very fond of that. Meanwhile, he was calling to short Bitcoin when it was in its insane pump. Yeah, I completely forgot that he was on there. That's right. I've been trying to figure. Everybody always talks about Gareth, and I'm like, who is this guy? Who is this guy? And I forgot that he was on that show. Dang. Okay, so I guess that was my one and only real interaction with him. Yeah, it is what it is, right? Corey, I'll check it, buddy. Yeah, I'll check it later today. Okay, man. As soon as I get a chance. Thanks, bud. And thanks for letting me know here. DMs on there can be crazy sometimes on the platform. Just so many people. Let me see here. By the way, guys, just in case you know, when you're joining group coaching or whatever, this guy right here, Sats McGee, you're going to want to follow. When you're on our platform, you can follow people. You're going to want to follow this guy. He posts a lot of great trades and a lot of great things he's watching. He's been with us for a bit as well. He's my buddy over in Austin, Texas. And really put some fantastic trades out there that's going to make you money too. So be sure that you're following him. Or if you're already in there and you're not following Sats, what the heck are you doing? Follow him. Let me see here. I got to go here in a minute, but I'll tell you what. I think somebody asked for a different chart. Give me a couple more charts, guys, and I'll pull them up for you if you want. Here real quick before we jump out. Somebody give me a chart that you want to see. We'll find something. Let me see if I can think of something I've got here. Let me see. What do I got up and open already? I guess we can probably pull this one. I can take a look at this. We can pull near in here. Near. We'll pull near in here. Maybe. There we go. Here. Link and render. All right, guys, give me a minute. So what I see here, this is near. Oh, man, I love the sweep of the low down here. Look at this setup here, guys. Swept that sell side liquidity here. Rallied up right into the supply here. And this supply, man, look how beautiful this is. Look how great this price action is. So you've got kind of this area where you're getting rejected, right? So it's right here. Yeah, the sideways got rejected, popped up through, found support. When sideways came through, got rejected, right through, found support. Again, just this really significant area here. Pulling back up into it now. But if I'm looking at this off this low, I see three waves on the pullback here. I would minimally, can't speak very well. I mean, we have an ABC potentially hitting us right here. If it can't get any further, then it's 494 to 491. But if we can pop up there, we got like a $5 target. What we can notice is we got volume expansion coming in pretty strong after the spike here. We had a spike of volume on the breakout above this. And why did we get the spike of volume here? We got this spike of volume because we were breaking out above this level. Let me zoom in a little bit for you guys here real quick. See this right here? See, I have this candle right here, this opposite candle, and then you have the rejection here. So this candle you got a lot of supply coming in here. You needed to have demand come in stronger to break out through, right? So you did it first here at the pivot, and then you followed up through on the breakout through here. Then you pulled back and followed up higher with more volume again. So you've really got some volume kicking in there. But if you look, it's all in this. Once we get to this, we hit this area up here, that low volume node area. See that low volume node? Yeah. So you can see that it's right here, pushing through on that one, and then again up here, pushing through that one. So if I'm looking at this, yeah, to me, this looks like a 1, 2, 3, 4, and 5. From here, yeah, looks like potentially here an A, a B, a C coming down there. This is all in the 1 hour, of course, which means big picture is dead air. We don't like dead air. Wave 3, $6.20. Minimum expected target, wave 5, minimum expected target, $6.64. Let me see here. And that's getting us moving up pretty good on that. Yeah. I mean, we're getting higher highs, higher lows. We like to see that. We want to get another higher high here. But yeah, locally, that's what I'd be looking at for near there. Let me see here. Link. I can't do all these, unfortunately, guys. I'm already over, but I want to do a few for y'all because I was talking a lot. So we can do this here. And it looks like TradingView is starting to act up on me a little bit. All right. What we got here now? Like it so far. Again, Link's another one of those ones I told us about running into this. I said we had based on the price action and volume relationship that we had here, I said this looked like reaccumulation or accumulation, I'm sorry. And back we were on the daily. And over here, again, for those of you that don't know, I mentioned that we were right about here. I said we were likely to get a spring. I said, if you can get that spring and buy in at $4 or $5, that's where you want to buy. And sure enough, the spring dropped down to $4.92 basically and took off. So, we got our little bit of a spring here, rallied up, a pull back into a test, show of strength, the last point of support, jump across the creek, show of strength, rallied up, ended up doing really well. And so now we have this pullback here. And again, this looks like a 1 and a 2. Looks like we got 1, 2, 3, 4, 5 up. Looks like we got an A, B, C. Well, maybe a W, X, Y. So A, B, C, W, X, A, B, C is Y is what it actually is there. But it's just 3. It's 3 is what we're looking for. The pullback, as you'll see here, almost 70.5%, which is one of my favorite pullback there. Nice bullish hammer here, large lower wick, spike of volume, just below support here, rallied up, came back down, and we got a higher low on lower volume. We like that. Broke out through the descending resistance here, came back, retested as support. So we're looking for a breakout above this swing high right here at $12.90.974. We want to see that to really kind of say, okay, the bottom's likely in here and we're going to head up. Breaking out above $19.20 here is going to add confidence to the idea this is a 1-2 and we got a wave 3 in progress. And if correct on all this, again, this is macro wave 4. So that would give us 5 waves up, minimally around 160. So, you know, we'll see how that plays out. It doesn't have to get up there. That's just based on the idea this is a 1 and a 2. Wave 3 would then have a minimum expected target of 90.51. And that would be based on this idea that we get the 1618 extension. I didn't pull it right there, but yeah. So get up in that area. Based on the height of this pullback, if we're going to break out higher, pattern target gets us up there around 227. So we'll have to see how it plays out as it's going here, but we've had, you know, again, March through now, we're still in this correction through October. We're still correcting. And so we've had a big bit of a correction. And the longer you correct, you know, the longer you consolidate, the longer you correct, the bigger and stronger your breakout should be when it goes there. Let's see here. Seth says Chris made me a bunch of money on his link call. That was a fun one. That one was good. That one and Saul. Oh, man, I got so much hate for Saul. Let me see here. Let me kind of catch up. I know I saw one other one in there after that. Render. What do we got for render? We'll do this. By the way, you guys should always date your charts, especially when you're updating or creating new ones. Just something that really helps on when you're trying to find where you are in your charts. If you're like me, you've got thousands of saved charts, and I couldn't do it if I didn't have them dated in there when I do them. I guess we'll just do USD here. I love the pin bar here, the doji on support. I love that. Let's see here. This looks like we're doing a leading diagonal. It looks like ABC, ABC. Maybe work on an AB and a C here. You guys will notice if you, by the way, let me leave you with this today. If you're looking on your alts, you'll notice a lot of these look like this, just like Bitcoin. They look like leading diagonals coming out of here off the really strong drop down the low there. So, you know, I would draw that line there and probably look for a target of that resistance there, maybe about $7, $7.25 maybe, kind of get us into this. You can see that we have this significant area to watch right here. Right here where you've got this support resistance right there, right here, basically right there, resistance again. So we could see it potentially even going as high as that, you know, $7.20. But then I would be looking for a pullback probably right around where it is here. If we can get that kind of rally. Now, it can always break out and rally higher, just like I talked about Bitcoin. But generally speaking, I'd look for that rally about that area. Get us right in this order block here. And then I'd look for a pullback, initial pullback right around $5.41 or so, maybe $4.95. This 38.2 to 50% retracement area is where I look on that. But if you look, again, if you look in your alts, guys, most of them are looking like this, where you're getting this, again, ABC is 1, 2, ABC is 3, 4, ABC is 5 to get up there. Now, what is going to invalidate that? If we drop below this swing low. So if this is a 1 and a 2, then if we drop below this wave 2 here at $4.45, that will invalidate the, and we haven't gone out, we haven't broken out higher. So we just, you know, we don't break out higher, but we come back down and drop below this. That will invalidate that and say that that's not correct. Okay. So that's kind of where I'm looking at on that. What do we got on the daily here? Yeah, I mean, this looks good on the daily. This looks like this is 1 and 2 done. Looks like we're going to break out higher here. Five waves up gets us right there at $7.10. What I say, between 7 and 7.20, sending resistance. So that would be where I would be looking for this to go on there. Yeah, we'll see if we can get that rally up. Going through there. 1, 2, 3, 4, 5. ABC. WXY. Yeah, so it looks like it's done. Looks like it's a 70.5 pullback. Yep. Wick down just into that 70.5 right there. Love the volume coming into the low here. He said the raise of volume coming in there at that low after we swept that low. I like it. I like it. So we just want to see this thing continue to rally up and break out higher here and then head up toward those target areas. All right. Ticker is render. They changed what? It's not RNDR anymore? What's RNDR then? It's still the same one, right? Yeah, it's still the same one. It's good to know that they changed it to render. Why not make it, more difficult, more letters, right? But it's the same thing as we're seeing here. Same kind of look. More or less, I think, right? Let's zoom out here to weekly. Yeah, still looking at the same thing here. A, B, C, 1, 2, A, B, C, 3, 4. Again, it looks like A, B, and C will be 5. So we'll still look up there on this chart. Maybe it'll reach the swing high here. Yeah, still around that same area. Still around that $7.20 area. Oh, okay. They moved it to the Sol network. See, you guys know a lot more about these the fundamentals of these companies and whatnot than I do. I trade charts, guys, and it works extremely well. It works extremely well. You don't have to know all this stuff. I appreciate you letting me know about it because I didn't know about that. But at the end of the day, it doesn't. I'm going to be honest with you guys. I've been doing this for 30 years. Make a lot of money doing it. You don't have to know fundamentals. You don't have to know the earnings call. You don't have to know anything about anything or what's going on there other than the chart. Once you understand why. Okay. So anyway, I am really out of here. Yeah, Revy, it looks about the same target, buddy. Looks like it's about the same target on that. So, and which makes sense. It's still the same thing, right? People still buy the same way. So, as always, remember the only thing you control is how much you lose. So please keep working on that risk management. As always, I appreciate the hell out of you guys showing up. Do me a favor, sign up there, TexasWestCapital.com/97GC. If you're already a group coaching or C3 member, or you have been in the last year, hit me up, send me an email to Christopher.inks@TexasWestCapital.com, or if you're on the platform, just DM me. And I can get you, I can apply that, what you paid there, toward the lifetime access on the group coaching. And so, again, guys, if you don't know me, this is what I do. This is what I do. If you're here supporting me in our business and what we do, I do my best to do right, by you and support you as well. If you want to continue to remain a member of it. So anywhere. Okay. Let me see here. Data says, if you want to check if your mouse is working, try the thumbs up button to check. Yeah, I love it. All right, guys, listen, y'all have a great day. Have a great weekend. Trade safe. Remember, the only thing you control is how much you lose. So please keep working on that risk management. I think we'll have Fibbo again next week. Again, we always try to have him every other Friday, but he's been kind of busy here last few months on Fridays. So sometimes we have to wait an extra week or two to get him. But right now, expect him to come in there. we'll see how it goes. Be sure you're following me, okay, guys? That'll do it. Y'all have an amazing, amazing weekend, and I will, gosh, I guess I'll see y'all. Hopefully I'll see y'all over at TWC, but if not, on X, and if not there, then at least here next Wednesday for Beards and Bitcoin, or next Friday for this market review show. Take care, everybody.